is the ELECTile Dysfunction podcast with Ashton Cohen.
I feel like we're in, to use a sort of analogy in terms of investing, in a bear market within a larger bull trend where, yes, the overall trend seems to be, and if you take a sort of 30, 40-year time frame of more towards human freedom and development and capitalism and free markets, particularly, I think, I remember reading a stat in the 1970s, the majority of the world was under communism, which is insane to think about.
Yes.
I think it was like 60% even. And now today, as you mentioned, there's like basically a couple left. There's the true believers in both the economic and political context are basically North Korea and Cuba. And then in the political context, it's China and Vietnam in addition. And so that is promising. On the other hand, it's almost like we have a new problem that abundance has resulted in, which is not even necessarily just the government abridging our rights, but also these giant tech monopolies that have more control and power over people's lives and what they're able to say and what they're able to do than basically any government in world history, with the exception of maybe America. You know, I mean, it's like Google has the power the Soviet Union would have begged to have, right? So, and then obviously you have the China aspect as well, who's exporting their surveillance state philosophy and tactics to other countries who are like, you know, if you're a ruler of another country and China's offering that to you, it's like, oh, this is actually a pretty good deal. You get to keep people in line. You get to control what they do. You see what they're, where they go, what they buy, this and that. So that, and I do think, yes, in the long run, it's just not sustainable. And even in the medium term, I just don't think it's sustainable. I think there's going to be serious repercussions coming for China, because they sort of let the genie out of the bottle in a sense, and they have amazing surveillance state. But at some point, with their diminishing resources in terms of energy and food and things like that, their population boom, which is now behind them, and the people who have gotten a taste of some economic freedom, and if the economic side of the equation doesn't work out too well for them, or starts to diminish, which I think it's bound to happen, then maybe you see some more pressure to get the political freedom. So I do think overall we have a lot to be happy about. And of course, you know, how many hundreds of millions and billions of people have been lifted out of poverty in just the last 20 years. Mostly, most of those people were in China. So that's great. But it is hard to see the forest from the trees because of the present state we're in with Corona and all this. But I do agree with your general point.
Yeah, I mean, you said it really, really well. You say like it's like 2 steps forward, 1 step back, right? Mm-hmm. I mean, the monopolistic power of some of the tech companies, right? I think the big dog is Facebook, right? So
and Google,
right? So those two big dogs. But we've been through this before, right? We had antitrust and trust busters in the railroads, when the railroads were the new technology, and people gained monopoly power. And we have the laws in the system. You know, in the Trump administration, towards the end, they were really starting to go after, the Justice Department was starting to go after tech.
Right. And
what's interesting is the new, we haven't seen it now. They went after, 20 years ago, they went after Microsoft. It took 10 years to figure it out and solve it. And now there's this new stuff. And so the wheels of our system do move slowly, but I do see bipartisan interest.
Absolutely.
In figuring out the solution. I mean, you got, on one hand, you had Donald Trump, and on the other hand, you have Elizabeth Warren. And you can't get more opposed.
Cohen of the FTC, who's like one of the most ambitious antitrust, I think, warriors around. So, I mean, that's literally her whole claim to fame, was writing a thing on Amazon. So that's for sure. I think that's promising. Is, you know, we have to have. I do think that they are especially a couple like Facebook and Google are a impediment to more competition, just because they're so powerful. They'll just buy you out, or they'll force you, or they'll copy your product, as Facebook has done many times, right? Mm-hmm. And so maybe that needs to be resolved. That's definitely the case. Do you think that, looking at the landscape in terms of equities and bonds, do you think equities are too overvalued? Do you think that, or should we, given the sort of fiscal policies and monetary policies by the Fed, and fiscal policies by the administration, do you think we're going to be in this state of, equities are going to be overvalued because we're printing so much money, so they look overvalued, but they're not really overvalued? How do you go about that? What's your perspective on that?
Well, I mean, look, the value of equities is the earnings yield, right? So that's the inverse of the PE. So the inverse of PE, the forward PE 5 months ago was like 26, 27. Mm-hmm. Stocks are way higher today, and the forward PE is down to 22. So why? Because earnings are exploding. The year-over-year earnings growth is amazing because we had a shutdown economy, and we could talk at length about the first ever supply side recession where we cut off supply. It wasn't a lack of aggregate demand.
Right.
But I don't think the equity markets are overvalued today. I think they have a little higher multiple than perhaps they have had in history, but you can only value things on a relative basis. That's that Econ 1, right? So the 10-year treasury is at 118, and that means, and inflation's, argue whatever number you want, but inflation's for the next 5 years is probably in the 2.5% to 3% range, at least. So you have negative real yields on 10-year USTs, the most negative in history. To me, that says the bond market is incredibly overvalued and that the stock market is actually the only game in town, which is awesome too, going back to our previous discussion, because, to me, we can own the means of production. That's the beauty of capital, this beautiful, efficient capital market. If I want to change things at Facebook, I can go buy 10 shares of Facebook and I can actually get something on that proxy. It'd be hard, but as a shareholder, you have a lot of rights as an owner, and you can band together with other shareholders if you want to make changes, right? So it's really up to the owners of the companies, and the owners of the company in America are the people, whether it's through their IRAs or their big giant pension plans, et cetera. So now I don't think the market's overvalued at 22 times earnings with a 118 10-year treasury. Now there's risks to that. If the yield on the 10-year treasury goes to 3.5%, 4%, well, then your market's going to have to contract because your risk-free rate of return is now 3.5%, 4%.
Right. And I just want to elucidate, maybe you can pitch in as well for our viewers who are unfamiliar with some of these concepts. So obviously P is price earnings multiples. It is price earnings ratio, one of the traditional metrics used to value whether a stock was overvalued, looking at its price relative to how much it's earning. And then obviously with the 10-year treasury, when you're talking about negative real rates, you're saying that inflation is going up as a percentage basis, even using the current CPI, which is a bit manipulated for sure, is devaluing your dollar more than what you can get from a 10-year treasury, which was always sort of one of the metrics to judge it by, right?
Yeah, if inflation is running 2% and your yield is 3%,
right,
your real yield is 1%. But if inflation is running 3% and your yield is 1%, your real yield is -2%.
Right.
And so that means, in my view, the bonds are overvalued. Why are they overvalued? Well, there's a massive amount of demand. The other thing too about the money printing at the Fed, a great economist, Milton Friedman, always talked about inflation is always and everywhere a monetary phenomena. But he goes on to say, in that if you produce more cash needed than the growth of the economy, you get it. So you do have to expand your money supply to facilitate economic growth. And because I believe that the expansion of capitalism is in its golden era, and this movement of freedom is an opportunity is started with the American experiment, and it's now being adopted slowly, begrudgingly. There's the last holdouts, but you need more money supply to do that. The question right now for us as investors is, are we going too far with printing 120 billion a month? That's the question. We won't know the answer for some time, right? But we're buying 80 billion in treasuries and 40 billion in mortgage backs every month out of thin air. That is a violent intervention into a normally free and efficient market.
Right. And it's unprecedented at this level.
Completely unprecedented. In addition to that, so we're soaking up. We've also done this experiment this year with modern monetary theory, which that's a dangerous experiment, right? The Fed buys government debt. The government takes the cash of this newly issued debt and just gives everybody money. John Maynard Keynes, who would have been the stalwart of the left, looks like a conservative, right? John Maynard Keynes' theory was, look, when you have a recession, you get out of it by public works projects. You borrow money, you get the people to work, the money circulates through the economy. He said at the extreme, you could pay people to dig a hole, fill it back up, and that would start to put a little gas in the carburetor, use an old analogy. We just bypassed everything, in the 30s, in the Depression, we said, well, let's build Hoover Dam.
Right.
Let's go build national parks. Let's put men to work on the interstate highway system.
Right.
Bypassed it all. And we sent them debit cards and we gave them cash. We don't know how that's going to end. And there are people within our government who believe, we had a presidential candidate, Andrew Yang, who believed you should just send everybody a check every month forever.
Right.
And their basis for that is that the US is the world's reserve currency. And
Right.
because we're the world's reserve currency, we can get away with what would be bad behavior anywhere in the world. My response to them is, yeah, but how far do you want to push the envelope?
Yeah.
Right. How many times, it feels really good to go to the punch bowl and have a cocktail, and then there's 2 cocktails, then there's 3, and it gets ugly after that, and you can die.